Mr. Doom itself, Marc Faber, editor and publisher of the famous news piece, the Gloom, Boom and Doom Report. Marc, what a delight to have you back on ET Now. Thank you for joining us. Marc, the famous bear on the street, I've heard, is turning a bull.
Well, I mean, it depends about what one is bearish about and what one is bullish about. So you have to specify your question.
Okay, let's start with gold. I understand that you are bullish on gold and you believe that in this current environment, the best thing to buy or the best asset price to buy is gold.
Well, I don't think it's necessarily the best asset, but what I am suggesting is that people should diversify their assets and should own some gold compared to paper money, because over time it is very clear to me that central banks will continue to print money everywhere in the world, and that therefore the purchasing power of paper money will decline. And so I would own some gold. But as I said, since last September, when gold hit a high of $1,921 an ounce, we are in a correction period, and I think we may still go lower. But on this weakness, I would continue to accumulate gold.
Marc, what about dollar then? Are you a dollar bull, and do you think the currency is only going to appreciate further?
I think it's very difficult to be bullish about the US dollar or anything in the US economy. But compared to other currencies, the dollar is now a relatively safe currency because global liquidity is tightening, and so the dollar probably will continue to appreciate, most likely also against the euro. But it's not that the US dollar is particularly good, it's just that it's less bad for the time being, and I have to specify for the time being compared to other currencies.
Marc, if I look at the global environment, US economic data is anemic. US or Europe is in a recession, it could be a depression soon, and China is preparing itself for a soft landing. Do you think for next 2 to 3 quarters we are potentially staring at a very uncertain period?
Well, I think the stock markets around the world have given a very clear indication that not all is well in the global economy. As you said, in Europe we are in a recession. In the US there's hardly any growth. And in China, in my opinion, if you look at the commodity markets and say announcement by a company like McDonald's just announced that their sales in Asia are down. So if you look at all these data, you have to assume that the slowdown is more pronounced. My view, from my personal observation, is that at the present time there is no growth in Asia. Doesn't mean that we are in a depression. We had a boom, and now we're no longer growing. It's just flat. But that is reflected in equity prices, and I think a lot of corporate profits will begin to disappoint.
Marc, so if someone walks up to you and hands you $100 bill, and his view is that, Marc, you're free to invest that $100, but I want $200 back after 5 years. How will you invest that $100?
I'll give it back to him and say, go somewhere else.
So for someone who's looking for absolute wealth creation, where should people invest their money?
Well, basically, I believe that we are in an environment where huge capital gains are unlikely to be achieved unless you take huge risks. And I think that preservation of your capital is going to be more important. That over the next 5 years, a lot of people will lose money in their investments. My view is you have to diversify, you have to own some real estate, you have to own some equities, you have to own some cash, you have to own some gold. And I think the asset allocation will have to be rebalanced from time to time. I just happen to believe that asset prices are not particularly cheap because we had huge asset inflation between 2000 and 2000.